Good morning to all. I am M.DEVIKA of Department of Commerce. Now let us see what is management accounting. Management accounting is concerned with accounting for management. While they are supposed to take up decisions related with a different process, they are supposed to deal with management accounting to take different decisions. Now let us see. Management accounting refers to accounting information to access management in creation of policy and day-to-day operations of an undertaking. It refers to presentation of accounting information in such a way as to assist management in the creation of policy to manage the day-to-day operations of an undertaking. It is also a form of accounting which uses financial and cost data for the purpose of policy formulation, planning, control and decision making by the management. It can be variously described as management oriented accounting or a study of management aspect of accounting or accounting for management. Next, definition for management accounting. Management accounting is concerned with accounting information that is useful to management, which is defined by the author R.N. Anthony. Next definition, which is given by W.M. Harper. Management accounting is concerned with accounting of management. Next, the author N.K. Bose defines management accounting as accounting for effective management in taking up the different decisions related with planning, organizing, coordination, etc. Next, let us see objectives of management accounting. There are different objectives related to management accounting. Number one is to assist the management in promoting efficiency. Number two, to prepare budget covering all functions of a business, that is related with production, sales, research, finance, etc. Next, to analyze the monetary and non-monetary transactions, to compare the actual performance with the plan for identifying deviation and their costs. Next one, to interpret financial statements. Next one is to submit to the management at frequent intervals about their profit or the loss which is related with the conditions of the business, whether it is favorable or unfavorable. Next, to arrange for the systematic allocation of the responsibility related to the workers. Next one is to provide suitable accounting information related with the concern, whether it is in a favorable condition or not. Now let us see what is the scope related with management accounting. The scope of management accounting are related with financial accounting, cost accounting, budgetary control, inventory control, reporting, statistical methods, taxation, methods and procedures, internal audit and office services. Now let us see in brief about the different scope. Number one is financial accounting. The financial accounting provides historical information. It is from the basis for future planning and forecasting of the business transactions. Next one is cost accounting. It provides various techniques of costing like marginal costing, standard costing, operating costing, etc. to predict the cost related with the operations of the business enterprise. Next one is budgetary control. This includes framing of budgets, comparison of actual performance with the budgeted, then computation of variances, finding out their causes and suggesting remedial measures. Next one is inventory control, which is concerned with the control over inventory from time to time. It is received till its disposal of the goods or the products to the production department. Next one is reporting. It includes the preparation of monthly, quarterly, half-yearly income statements and other related reports such as cash flow statements and fund flow statement. Next option is statistical methods, which includes statistical tools like preparing of graphs, charts, index numbers, etc., which is used for the presentation of information to various departments of the organization. Next one is related with taxation, which includes the preparation of income statement assessing the effect of tax on capital expenditure, proposal and pricing of goods. Next one is methods and procedures, which deals with the organizational methods for the cost reduction, procedures for improving the efficiency of accounting and office operations. Next one is internal audit, which refers to the establishment of a suitable internal audit system for internal control. Next and the last one is office services, which covers a wide range of activities like data processing, filing, copying, printing and communication, which is related with the different departments of the organization, etc. Next, we'll see what are the different functions of management accounting. Normally, the management accountant has to plan for the future about forecasting, organizing, coordination, controlling, analysis and interpretation of the data, communicating and economic appraisal related with the organization of different departments. Now, let us see in detail what is forecasting. Forecasting is making short-term as well as the long-term forecast and planning the future operations of the business. Next one is organizing, which is the human and physical resources of the business, which is done by assigning specific responsibilities to different people of different departments. Next one is coordination, which is providing different tools of coordination, which is an example of such tools are budgeting, financial reporting, financial analysis and interpretation, which has been spreaded in different places, has been brought together and coordinated in a particular place to achieve the target. So that process here is referred to as coordinating of the efforts which has been spread in different places. So it is also one of the most important function related with management accounting. Next one is controlling. Controlling here refers to fixing of standards and comparing the actual with the standard. If there is any deviation, they have to take up the remedial measure. So here controlling performance by using standard costing, variance analysis and budgetary control is utilized. Then analysis and interpretation is analyzing and interpretation of financial data in a simple and purposeful manner to know whether the concern is in a favorable condition or in an unfavorable condition. Next one is communicating. So communication is the main process which helps them to achieve the target in a proper way, which is the result of economic force and governmental policies and interpreting their effect on business. Next one is advantages of management accounting. There are different benefits related to management accounting. Number one is helps in decision making. So management accounting helps in decision making such as pricing, make or buy decisions, acceptance of additional order, selection of suitable product mix, etc. and it takes a proper decision to achieve the target. Next one is helps in planning. Planning includes profit planning, preparation of budgets related to different concepts, either cash, expenses, sales, production, etc. where the program of capital investment and financing is a must to decide in advance to plan about the future. Next one is helps in organizing. This helps in organizing is nothing but the management accounting uses various tools and techniques like budgeting, responsibility accounting and standard costing to know the aspect, either the condition related to the concern is in a favorable condition or in an unfavorable situation. Then the next one is which facilitates communication. This management accounting is provided with up-to-date information through periodical reports given by the management accountant to the concerned person to find out whether there is proper communication to achieve the goals or objectives. Last one is helps in coordinating. The functional budget such as purchases budget, sales budget, cash budget, overhead budget, etc. are integrated into one to know which is called as a master budget, which helps the concern to achieve the goals of the concern. Next one is evaluation of control of performance. Here this management accounting is a convenient tool for evaluating the performance of the concern related with the different levels of workers. Next one is interpretation of financial information. This management accounting present information in simple and purposeful manner to achieve the goal. Next one is economic appraisal. This management accounting includes appraisal of social and economic forces related with the governmental policies. Next one is not an alternative to management. This management accounting will not be replaced related to the management and administration, where it is acting as an effective tool to achieve the goal. Next one is accounting. Now, number one is based on accounting information. Management accounting derives information from past financial accounting and cost accounting record. It is purely based on the accounting information which is given by the different departments. Next one is it is having wider scope. That is, management accounting has a wider scope in incorporating the various disciplines related to different departments. The next one is costly. The installation of this management accounting system requires large organizations and which is related only with a large scale concern. Why? Because the cost which is related to the installation of this system is high. The next one is evolutionary stage. Management accounting is still in its require, which is related to large scale concern alone. Why? Because it is related with high cost. Next one is opposition to change. Introduction of management accounting system requires a number of change in the organization structure, rules, regulations, policies, etc. This accounting system used to have certain limitations or drawbacks related with the organization. The next one is intuitive decision. This management accounting helps in scientific decision making, hence it is not to be utilized by all sort of concerns, either it is the short term or medium term concerns. Hence it is considered to be a drawback. Next comes the differences between management accounting and financial accounting. There are different aspects related with the difference. Number one is objectives. On the basis of objectives, this financial accounting information is in the form of, it is to be presented in the form of P&L account and balance sheet, whereas management accounting used to provide the information for internal users alone. The next point is performance analysis. This financial accounting is concerned with the overall performance of the business, whereas management accounting is concerned with the different divisions of the departments related with the organization. Next one is data used. Financial accounting is mainly concerned with recording of past events, whereas management accounting is concerned with future plans and policies. Next point is nature. Based on nature, financial accounting is based on measurement, while management accounting is based on judgment, whereas financial accounting is more objectives and management accounting is more subjective. The next point is accuracy. Accuracy is an important factor in financial accounting, whereas in case of management accounting, it is purely related with approximations. We can't obtain that accurate information related to accounting of management. The next point is legal compulsion. Financial accounting is compulsory, whereas this legal requirements, it is only optional in case of management accounting. Next concept is monetary transaction. That difference is financial accounting records only the transactions related to cash, whereas management accounting records not only monetary transactions but also the non-monetary transactions also. Next one, control. Financial accounting will reveal whether plans are properly implemented, and management accounting will be the deviation of actual performance with the actual plans. Next one is difference between cost accounting and management accounting. Now here also we are having different types of deviations, that is the difference related with cost and management accounting. Now let us see what is the objective related with cost accounting. Cost accounting is the ascertainment and control of cost of products and services, whereas management accounting is the help, the management in case of decision making, planning, control, etc. Number two, scope. The scope related with cost accounting deals with the cost data, whereas management accounting deals with both cost and revenue. Next one, data used. In case of cost accounting, only those transactions which can be expressed in figures are taken, whereas in case of management accounting uses both quantitative as well as qualitative information for the accounting purpose. Next one, nature. In case of nature, the cost accounting uses both the past and present figure, whereas management accounting is concerned with the projection of the figures for future aspect. Hence, it used to give a proper decision related to planning, organizing, or it may be related with the coordination or controlling aspect for the achievement of the target related with the accomplishment of the objectives to different departments. Thank you.